Welcome back to the channel, Crypto Trend Trader. Today's video, we're going to be taking a look at long-term technical analysis on Bitcoin. Bitcoin is the dominant cryptocurrency, so in many ways this is a proxy for the overall direction and health of the cryptocurrency market in general. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. So here we have our monthly Bitcoin chart. So first and foremost, obviously our most recent time action is the most important. But if we look at the broad scope of things, we see essentially we had a nice run up from 2011 that led to a peak in 2013. We then had a bottom here in 2015, followed by a peak in 2017, 2018. And then again, we bottomed here in 2018, followed by our most recent run up into 2021. And then we pull back down here. And as we come towards the end of 2022, the real question is, where is crypto going? There's no doubt in anyone's mind that we are, in fact, in a bear market. We see with the 4-year halving cycle that we typically result in a bear market. The halving takes place, and then we go into another bull market. Same thing again, the retracement begins. We go into a bear market, followed by another bull market. So now here we are in a bear market, and so far this bear market looks worse than the previous two. I say it looks worse because we can see when the 8 and 21 bear cross took place, we consolidated below those levels for some time, and then we did put in a macro new low. In the previous bear markets, when the 821 bear crossed, we consolidated, put in a bottom, and then worked our way out. Here we had the bear cross take place. We put in our low, went sideways, never took out that low, and then eventually went back into a bull run. So that is not what we see here. As when the 821 bear cross on the monthly took place, we had a big sell-off, and then we actually have taken out that low now. So we're already seeing behavior that we have not seen in the previous 4-year cycles. If you're not a believer in the 4-year cycles, I suggest you look more into it, as essentially written into Bitcoin's code is the halving event. So every roughly 4 years, the reward gets cut in half. Therefore, the price of Bitcoin, in order to stay profitable for miners, would have to eventually rise. And that is essentially what causes the parabolic bull runs in crypto. So that being said, we're here on the monthly chart. If we pull up our indicator oscillators, we have the TDMACD right here. We see we have lost the slope line, and the slope line has flipped red. We are now below the zero line, and we have all red histograms. Very bearish movement as of now. Now, this on the monthly, though, is not going to give us a good signal as to when the bottom is going to be in because it lags so far. But it's very clear that the momentum is still to the downside and still very bearish. And then here on the Jewel Thief, we see we have left the bullish control zone. We had the hard sell signal, and since then we have been getting absolutely melting down. We now see we're very clearly inside of the bearish control zone. The bears are very much in control, and we're only now seeing the knife start to move back up above the blue stochastic. So that being said, what does that tell us? It tells us momentum is still very much to the downside, and as our most recent monthly candle is a new lowest low, it tells us there's no sight of a bottom, at least on the horizon for now. Does not mean that the bottom won't show signs shortly or on shorter time frames, but on a monthly time frame right now, this thing is still very much in a bull market, but we're in a current correction or bear trend of our 4-year cycle. So the next thing to do is, how do we figure out what's going to happen next? Let's go ahead and zoom in here. So this is our long-term technical analysis, but now we're going to switch over to the weekly and see what is the weekly telling us. Well, we can see on this chart pretty clearly that as long as we have our weekly 200 exponential and simple moving averages, the entire life of Bitcoin, they have acted as support. We have never really closed below them, with the exception of just maybe one little bit of a candle here on the Rona dump. But other than that, they have always acted as support, the two of them together, or one specifically, the 200 simple. So that being said, here we lost the 200 exponential and then also lost the 200 simple. We back tested it as resistance and then proceeded to put in lower lows. The 200 exponential now has a red slope. The 200 simple is almost flat, so very close to flipping a red slope as well. This has never happened before in Bitcoin's history and tells us something ominous may be on the horizon. So here we are below the 8 and 21. They're still bear crossed. We're below the 200s. The 200 simple still has a positive slope, but we're very close to confirming into what is a weekly bear market. Not a good sign for crypto. Now we do see the histogram has moved back above the slope line, which is good. We see quite a few green histograms as price goes lower, which is not necessarily as good. So we're seeing a divergence between the momentum and the actual price action. And to tell you the truth, that is often followed by the momentum flipping back and then the price action continuing in the direction of the trend, which in this case is down. So we are inside of the bearish control zone, not seeing a lot from the Jewel Thief at the moment. So let's flip down one more time to our shortest time frame here, And here we have our daily. So here on the daily, we see we basically flipped into a bear market after we put in our double top. Here the 200s flip bearish, very similar to what's already happened on the weekly chart. So if we look in here a little closer, this is essentially what we're looking at for our weekly scenario. We broke below them. The 200 exponential is already red. The 200 simple is basically flat, but still blue for now. So it's not crazy to think we come back up and back test that level before going lower if it continues to act as support. So that's on the weekly. Here we are on the daily, and we can see after that back test took place and failed to reclaim those levels, we then proceeded to melt down and have continued putting in lower highs and lower lows the entire way. So we have basically a series of lower highs and lower lows the whole way down. Obviously not a good sign. If we come up here and take some of our tools, we can see essentially if we go from the tops right here and we just touch our top right there, we can essentially put in some form of like channel resistance. We can come down here and test it at the lows and see how that lines up. We could put it down here at the lowest low, but it seems very evident that essentially what happened here was this was our previous level of lows. And essentially, we have clear heartline tests along the way. And then we broke down actually out of that channel, but then we were able to reclaim it. So we didn't see, you know, a horrible violent sell-off that we could have potentially. So we are near the bottom of the channel right here, technically at support for now. But what we're looking for on these shorter time frames is the building of momentum to potentially reverse this trend. And in order for that to happen, what needs to happen for even a potential reversal, and we see here the 8 and 21 cross green and we start moving to the upside. When they're red, we continue going to the downside. When they're red, we're on our way to put in new lows, and the trend direction is obviously down as long as we're below the 200s, and they are in fact red and pink respectively. So we see we had a decent run here when they crossed upside. Here we had a pump up and we were unable to maintain that pump. This looked like an exit pump for liquidity. Here we attempted to push back up and failed again. One more time here. And then finally that was our throw over or failed breakout, at which point in time we crossed negative again and put in new cycle lows. So the fact that we have just put in new cycle lows this month and we're consolidating this close to the lows does not make me particularly bullish. If we zoom in here close, we're attempting now to cross that 821 bullish once again. But so far this attempt has failed. We've been consolidating above that level for day after day after day. And now here we see an aggressive push down. So if this closes below and this is in fact a rejection, I would expect us to come back down here and revisit the lows and potentially head to our target of about 14,000, which we'll talk about shortly. If we look at the shorter time frames, we see the battle for the 4-hour 821 cross is also happening, and we're still below the 200s as well. So again, even the shorter time frames not giving us a particularly bullish scenario. So here, if we look at our momentum indicator oscillators here on the daily, we see we have a bunch of green histograms. We have crossed back over the slope line, which is good. It's still red and almost flat. If we hang out here long enough, we'll flip that slope line blue and start to build momentum to the upside. So that's the beginning of, you know, what would look like a potential move back up to retest the 200s. While that doesn't necessarily have to happen, we look for, you know, essentially, are we using up all of our energy to cross things bullish and not actually moving price? Because that's how it seems so far. Here we're in the bearish control zone. We get the hard buy signal. We have a nice move up on the stochastics and enter into the bullish control zone. So we have moved all the way from the bottom of the range to the top of the range. And in that time, we essentially move from the low at 15,758 up here to our recent high at about 17,100. So a very, very small move considering that we have used this much momentum to get to that level. It does not mean that we can't push up here and start retesting some of these supports or the moving averages. What it means is we're spending an awful lot of energy just to hold on. And we've talked about this metaphor quite a bit. When you're on the edge of a cliff and you're spending all your energy just to hold on, not climb up or get out of that situation, eventually you're going to get tired and you will fall. And that's what we see here with the bloody waterfall. We're essentially just hanging on to the edge of the cliff, not ever getting out of this bearish zone, and then eventually we just fall to the next level and look for support there. And essentially all that is the mentality or the sentiment of the market. If there's not any buyers coming in and every dump we have, we get a small bounce off of it, eventually less and less buyers will come in and then we'll retest a lower level. So now let's take a look. Instead of our indicators, we're going to look at our Fibonacci levels. So here, if we look on the monthly, we can see some very clear swing lows and swing highs. So without going into too much detail on these, all we're going to do is pull up our fib tool. We're going to take our lowest low, which is basically $2 on this chart, but we could essentially start at 0. And then what we're going to do is just put it up here to our first high, the cycle top from November of 2013. And then what we're looking for is essentially when we come down and retest support, what fib level do we come down to? So in this case, we come down to the 236. almost to the 382. So we get a 23.6% retracement before going back into our next bull run. The next bull run after that, if we just do the exact same thing here, and we'll just switch this one over to green, we'll see from that low there to the high in 2017, 2018, we came down to the 236, we consolidated for some time, and then eventually when we fell from the 236, we tagged the 382 perfectly. Very, very technical move, and nice support there, wicking down to the 382, followed by a series of higher highs and higher lows, eventually working our way out of that bear market. And then finally, if we just look at the most recent run from that roughly $3,000 level in 2018/2019, around the bottom there, and then we take that to our most recent high, we'll see now, I'm going to switch this one to white. We have basically come down so far below the 382. So we consolidated at the 236. We lost that and came down to the 382. We tried to reclaim that level. It acted as resistance, and now we broke down almost perfectly to the 0.5. And that is roughly around 14,750. So that seems like a very likely target for our move. We're not far off of it for now. We also see here on the monthly, we have multiple candles, the top and the open for the following month here, right at that 14,000 level. That was also the wick that stopped us right here when we came up. So again, 14,000 roughly seems like a very, very likely target for now. Now the real question is though, if we retrace the first time only to the 236, the second time we retrace to the 382, is the 0.5 going to be the bottom, or are we going to have a deeper retrace? And the real question that we need to take into account on this one is, what would potentially cause us to have a further downside? Are we closer to the bottom, and what does the risk reward look like? So if we go ahead and just delete all of those tools right there, and then we look at the macro here, when we do have a 5-wave structure build like this, and we go into essentially first wave, a second wave retracement, a third wave, a fourth wave retracement, and then a fifth wave, what we're going to look at then is the potential that we might actually be correcting the entire 5-wave structure. And this is where the bearish scenario comes in. This doesn't necessarily have to happen, but it's worth at least considering. What we see here on this chart is if we do start basically at $0 or $2, whatever you want to use, and then we basically draw our way up here, we can see some clear areas actually line up even on the way up here before we know where these levels are going to be at. We see obviously the peak of the 382. We see some support here around the 0.5. We break through that. We shoot up to the 382 again, retest those highs, and then we shoot higher, overshoot the 236, find support on the macro 236, break down below it, find a bottom, support again on that Rona dump, and then again we go up to our macro all-time high. So we see some clear interactions with these various Fibonacci levels telling us, hey, there's other people probably looking at these as well. So obviously the first target and first one for us to pay attention to is the macro 236, and that is roughly around $6,000. So roughly potential for us to come down, we're looking at 14,000 and then potentially as low as 6,000. Now, of course, that doesn't have to happen, and that would be a very, very bearish scenario, but we've already seen quite a few bearish things take place. Like for instance, one thing that the Bitcoin or crypto people were really counting on was the fact that once we have put in a high and a low, we put in a following high and we never came back down to that low again. And then here we put in a new high, and now we have actually broken down and we have retested those lows. So we've done something we've never done before. We have 5 pretty clear structures here for a 5-wave structure for Elliott wave, and we see a lot of potential interactions not only on the shorter time frames and the micro fibs, but also on the macro fib as well, telling us there's a very high likelihood we actually will come down here to that macro 236. Once we get down to that level, will that be the macro bottom? Will we have a deeper retracement to the 382? Will crypto completely die from regulation or become illegal? Will it by then be the world reserve currency? Who knows, but it's at least worth paying attention to the potential that we could have a deeper retracement. So that being said, that is our macro potential bear case scenario, but what are we looking at to the upside? Well, there's another way that we can simply do that as well. So we're just going to use our same Fibonacci tool, and instead of drawing from the bottom to the top, we're going to go from the top to the bottom and see if that projects out potential targets into the future. So here we have the 1.236, 382.5, 1.618, 786, 2.5, 2.618. And we can see here essentially when we pushed up on the next bull run, we essentially came up to almost a 2.5. So we had basically 2.5 times this move right here. The 1 gets us back to that same level, and then after that, it's just an extension of that 1. So roughly, let's say the 2.236 to 2.5 here for that one. And then if we just do the same thing again from our 2017 peak to our 2018-2019 low, we see we came up here almost exactly to the 1.618 Fibonacci extension. So the first time was roughly 2.236, second time was 1.618. So we don't know when we're going to put in a bottom here, but let's just do some hypothetical scenarios. So what if we essentially take our same fib tool and we say, okay, if this is the top right here, and then we just say, okay, the bottom is already in, we're confident we got there, or let's say we go slightly lower, maybe we get down to 14,000, so we can put it just a little bit lower, and then we can look at where are the potential targets going out into the future. So again, if we look at the 1.236, that gives us a target of roughly $100,000. The 1.382 gives us a target of $125,000. 1.5 is 150,000. 1.618, the most likely target, and where we went to on our last push up here, that is roughly 183,000. And then of course we could get a crazy move up here as high as, $1 million if we got up above the 2.618. So what about the other scenario? What if we're not done actually retracing and we're going to go lower before we go higher? So then we can just put this macro fib back on and say from all the way at the low to the high. And then what if we just assume we are actually going to come down to this 2.36 or 0.236 level at roughly 6,000. Obviously, that's not everyone's base case scenario. That would be very bearish short term, but where would that potentially put our Fibonacci extensions? So essentially, we're just saying we're going to continue down here to that 236 macro level in white, and then after that, we're going to hit our Fibonacci extensions. So our 1.618 is roughly 317,000. If we go up here, some of the higher targets, so 2.5 or 2.618, we're talking about crazy numbers like roughly 3,800,000. So the truth is, the deeper the retracement goes, the higher the next wave likely goes. So because this is essentially using from the peak to the trough and then extending that out into the future, again, a deeper retracement may seem more painful or more violent now, but in the long run could actually be a better thing for the crypto space in general and potential price targets in our next bull run. What if we had a minimum push up here to the 1.236? That's still 124,000. So from where we're at roughly 16,800 now, or the potential target of $6,000, from 6,000 to roughly 120,000 is a massive move to the upside and essentially like a 20x. So that being said, there's definitely some potentials for these massive moves happening. What about, can we time these moves at all? Is there any way for us to roughly have an idea when this situation is going to take place? And then that way we can use it. Well, we know we have the 4-year cycles. So lots of people believe in the 4-year cycles. It is written into Bitcoin's code. So maybe we're taking a look at. So if we pull up our cyclical line right here tool, and then we essentially go from the macro high right here in 2013, and then we just extend that out to the macro high in 2017, we can see that very accurately predicted the high. It wasn't perfect here, and depending on what time frame you're on, it may be a little more close or a little bit more off. But essentially, if we just zoom in here and basically just pick our time on the weekly, there's our highest week right there. And then we're going to go to our next one here, and we see it's just a little bit off the top right there. And then if we just zoom all the way out to the most present one, again, it was very close within a couple of weeks. So it seems like there's at least some kind of play based on where these stops are at. So let's go ahead and flip that over to red. And then we'll just grab that same tool just one more time, and we'll go from our lows down here and see if we get something similar. So we'll go ahead and flip that one to green and see how that one worked. So here we see at our initial low, it didn't really work all that well. So what if we skip that first low and just go off the second and third low and see if we can get a little more accurate of a picture here. So here we have from that low, and then that one is actually pointing to exactly where we're at right now. So our most recent push down. So honestly, this is telling us that, hey, based on the 4-year cycles and what has happened previously in the past, it has pretty accurately predicted the peaks. And also, from these past 2 lows, if we're going to extend that out and potentially extrapolate that and do something roughly similar, that we may have actually already reached our lows. Now, that's not my base case, but it's at least worth paying attention to. The truth is, we don't really know where exactly Bitcoin is going to go from here, because essentially we saw some strength in it and now we're seeing a bunch of weakness, and the weakness we're seeing now is weaker than it's ever been in the past in comparison to like previous all-time highs and bull runs. So as we do continue to the downside right here, the easiest thing, in my opinion, is to just use a trend following strategy, something very, very simple. So in this case, let's go ahead and actually just turn off like the actual price action for Bitcoin itself. And then we're just going to leave on the TJD master, my proprietary indicator. And we'll see here when we look at this on the broader sense, it's very, very simple. All we want to do is just be involved in this asset when the 200s are blue here, positive and moving to the upside. We want to be out of the asset when they are red and moving to the downside. So we see obviously here We went into the bear market from that 2018 top. And from then, the moving averages were red until essentially the bottom. If you bought back in around the bottom when they crossed back to the upside and flipped blue, you were getting back in around roughly like $4,000 to $5,000. We had a little fake out right here where you may have gotten out and then back in, or potentially back in here at about $8,000. But if you rode it from 4,000 to 8,000, you doubled up your money. If you rode it again from 8,000 when this confirmed bullish and then sold out here, you rode it from 8 to 42,000. And then if you got out roughly here when we flipped into the bear market, you got out at about 50,000, and we're currently at about 17,000 now. So you avoided a bunch of downside, you capitalized on the upside, and it's a very simple trend following strategy. So in my opinion, until we actually get back above the 200s and flip them blue, we can use this trend following strategy. There's really no reason to be investing or speculating inside of cryptocurrencies for any type of medium or long-term time frame. Now, I'm very bullish on crypto and Bitcoin going into the future, but the truth is the data can't be denied. And right now, we're clearly in a bear market. The bear market looks like it's going to continue. We're regularly putting in lower highs and lower lows, and there's no sign of that changing anytime soon. So that's it for today's video and our long-term breakdown on Bitcoin technical analysis. If you're interested in other videos like this, feel free to leave recommendations or requests down in the comments. Obviously, none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Even though crypto doesn't look particularly good right now, and we're clearly in a risk-off environment based on the Fed tightening and inflation taking place, it doesn't mean that there's not potential opportunities in many of these assets or asset classes. So that's it for today. Crypto Trend Trader with our Bitcoin long-term technical analysis. If you enjoyed today's video, make sure to like and subscribe for more content like this. Crypto Trend Trader, and I'm out of here.